Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the timing for a market cycle peak, my most dubious extrapolation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we showed this projection about a year ago, but a lot has happened since then, and I just wanted to show it again, considering there's maybe some new people here who haven't seen it before. If we dubiously extrapolate prior peaks, we can actually come to a point in time that could be the next market cycle peak for Bitcoin, which is actually very different from what most people would expect. Okay? Now, the first thing we have to note with this type of extrapolation is we are going to put it in a context and we're going to see if it makes sense from the viewpoint of a lot of other different metrics, okay? So we're not just going to show one chart and then say, all right, you can take this to the bank. We're going to show very, very dubious extrapolation, and then we're going to look at it in the context of what the other charts are showing us. Hopefully that makes sense. Now, before we get into this first chart, I need to tell people that a 1 over x extrapolation off 3 data points is ridiculous. It's absolutely ridiculous. We cannot take it to the bank. It's just ridiculous. So that's what we're going to do. Okay, that's what we're going to do. So we have our 3 prior peaks for Bitcoin, peak 1, peak 2, and peak 3, and we've noted how many days into Bitcoin's existence did those 3 peaks occur. So this one was a few hundred days. This one was closer to, somewhere between 1,000 and 1,500 days. This one was between, say, 2,500 to 3,000 days. So where would that put the 4th one? Well, there's this little trick we can do where we take 1 over days. So days inverse, the inverse of days. And you get something that looks like this. And then you can simply fit it to an equation here. All right. Remember, this is inverse days. Okay, so it's 1 over x. It's not x, it's 1 over x, where x is number of days. X is time. And you get this fit. Pretty good fit. Peak 1, peak 2, and peak 3. And then you come over here, and you say, well, where does it go through peak 4? And they say, well, at around 0.0002 something. Well, what the hell does that mean? Well, you just have to take the inverse of that, and you get just shy of 5,000 days, maybe a few hundred days shy of 5,000 days, based on based on Bitcoin's price history, not like its entire existence, because we don't actually have information on Bitcoin going back to 2009 when it first launched. When you do this, would you care to guess where that would put the next market cycle peak for Bitcoin? It would put it in the summer of 2023, the summer of 2023. Does not put it in the summer of 2021. It does not even put it in the summer of 2022. It puts the next market cycle peak for Bitcoin in the summer of 2023. Okay, now what is Ben smoking to say that the market cycle top for Bitcoin is not until 2023? You're probably wondering what I'm smoking. But let's look at it first in the context of other charts we've looked at, okay? So the first one we can look at is the return from, say, cycle bottom. And we can note that we're probably currently around 900 days. Okay, around 900 days since the cycle bottom. To go 2 more summers, how many days is that? Well, we know 365 days in a year, so we're looking maybe around 700 days, give or take, right? Give or take. 700 days from now would be all the way out here at 1,600 days. That's getting pretty far out, okay? So I'm certainly not saying that we have to go out until the summer of 2023. And you might say, well, why can't you take the 1 over x extrapolation to the bank? Why can't you? Well, you have to remember that if any of those peaks were off by, say, a couple of months, like let's say the 2017 peak occurred not in December, but it occurred, say, 3 months before, then it would probably project the 4th peak to be sometime in mid to late 2022. So it's very sensitive. It's extremely sensitive to these data points. And that's why we cannot take it to the bank. That's why we cannot say definitively that the next market cycle peak for Bitcoin will be in the summer of 2023. We're just taking the dubious extrapolation and saying, well, does it make sense? Does it make sense when you look at the other charts? Could it go that far? Well, imagine the price of Bitcoin for it to have a market cycle peak out in the summer of 2023. If we're at 900 days now, we're looking at 1600 days over here. That's a pretty extended cycle. And so that's why I've said many times that I think the cycle peak could still come in, say, 2022, not Q1. I'm not referring to Q1 of 2022. And in fact, if the cycle peak were to come in 2021 of Q1, let's say it came in Q1 of 2021, or sorry, if it came in Q1 of 2022, then that would be closer to the 4-year cycle. We really couldn't look at a Q1 peak. Like if it peaks in January of 2022, that's close enough to December to say, hey, it's close enough to 4 years. But if it occurs later in 2022, as you get later into the year, then obviously it's going to be easier and easier to argue that the cycle is in fact lengthening. Okay, so the first one here, so this is cycle 1. It happened after a couple hundred days or so. This one's about 700 days, 750 so far. Or the last one went to maybe 1,050, close to 1,100. So far we're currently at 900. So again, the 4-year cycle theory would imply that we go straight up in the next couple hundred days to 300k. Okay, that would be the 4-year cycle going back up. And again, not every 4-year cycle theorist says 300k. Some of them would just say 100k or 200k. So I want to be clear about that. But there are a lot. I think a lot of the people that follow the 4-year cycle are saying the 300k by the end of the year. So now we look. Well, 1,600 days. That's pretty far out from here. I mean, that would certainly be lengthening. One thing you can note is that the time between, say, this peak and this one was, at least the difference was actually a lot longer than this one and this one. So you might not assume that it could go quite that long, and that's why we say, hey, it could happen in later 2022. Let's say it happens around 1,400 days, which is what we've drawn out sometimes when we draw these dubious peaks here. This one I drew to 1,300 days. But imagine I went to 1,400 days, then that would put us maybe the end of 2022. Okay, if it went to 1,300 days, we'd be looking closer to the middle of 2022. But you get the idea. Could it make sense in terms of looking at something like that? Here was the one I drew past 1,400 days. The next one. Could it make sense? Well, it could. But it also is stretching it a little bit when you look at it in the context of just this chart. It's stretching it a little bit, but certainly is possible. Now, if you look at the halving chart, does it make sense? Does it make sense from the context of the halving? Because I know some people like to normalize it from the halving and look at the market cycle ROI as measured from the halving. Well, again, if you're on the 4-year cycle boat, if you're in that camp, you're expecting it to immediately recover and continue moving up over the next few hundred, or not even maybe 100 to 200 days, 150 days. Let's say 150 days. I think that's the general thing for the people that follow it strictly from the halving. You're expecting it to have a market cycle peak within about 150 days or so by September, maybe October. And I certainly think it will extend beyond that. Now, how far beyond it could we go from the current? We're not even at 400 days yet. Okay, we're maybe at 375. So a year from now, which would put us in, say, the summer of 2022, we're not quite into the summer of 2021, but we're getting there. We're fairly close. So a year from now, let's go out 350 days or so. So this would be 4. So this would be 100, 200, 300. So it might put us around here. So this would be the summer of 2022. Now, would that make sense? Could it make sense for the ROI to maybe go over in this ballpark by the summer of 2022? I think it's possible, for sure. I mean, I think that looks somewhat reasonable. Now, the summer of 2023 is getting all the way out here, which does look a little bit far-fetched, right? It looks a little bit far-fetched as you measure it from the halving, that this one would come after, 300-something days, this one would come after 500-something days, and then the next one would come after 1,000-something days. So that's why we say that the general window for a lengthened cycle is just it's not 2021, right? It's not 2020. If it's 2021, right, we'll say okay, 4-year cycle is right. It's getting into 2022 and beyond that. Okay, it's getting beyond that. So this again, the summer of 2022 would put us, somewhere out here. And then as we get into the later part of the year, it would continue to move out. So this is why I say, 2022, 2023 seems to be a realistic projection at this point in the cycle. Seems to be a realistic projection when you look at it as measured from the bottom, when you look at it as measured from the halving, when you dubiously extrapolate 3 data points from 1 over x, and you should not try that at home. From here, I think we should take a look at the this. I think we should look at this, and we should note, right? We should note that on this chart, we have our major moves. We have our major moves over the years, okay? And this one from bottom, 280 days, 749 days, 1,071 days. So if the next one is 1,071 days, it would be putting us market cycle peak into the year. This is why a lot of people think into the year. If we were to go to the summer of 2022, we'd be looking at something like that, 1,300 days. Does that make sense? So this would be, adding about 500 days here between this peak and this one. This one would be adding maybe around 300 days. And then this one, so this will be, sorry, this is from the bottom. Let me measure this out. I think I have it close. Yeah, that's 280 days. So this was 280 days. This one was 770 days. This one was 1,071 days. So you can see that this was around 300 to around 500. This one here was around 300. If we continue further out, where does it in fact come? Well, could it go out another 500 days? Could it go out another 300 days? Well, if it goes out another 300 days from this, then it would put it around this point. So maybe August of 2022. If it went out 500 days, it would put it out in 2023. You might say, well, why don't you dubiously extrapolate this and say this was 500, this was 300, maybe the next one's 100 or something. If it went out 100 days beyond, then we'd be looking at around 1,200. That would actually put it in Q1 of 2022. Okay, but any way you dubiously extrapolate this stuff, it puts it into 2022, not 2021. Now you could say, well, Ben, measuring it from bottom to top doesn't make a whole lot of sense. Why don't you measure it from bottom to bottom and show us what's up? Okay, so that'd be 441 days. This one would be 1,162 days, and then this one would be 1,421 days. So we're adding about like 800 days or so. Here we only added 300 days or so. So the first bottom to bottom 441 days, the next bottom to bottom 1,162 days, and then this one to this one was 1,421 days. So if we continue to lengthen, if we went out exactly 421 days, then this would put it at October of 2022, which is in line with the 4-year cycle theory, basically just, going up to a cycle peak by the end of the year, and then having a bear market until October, and then continuing on, right? That would be in line with the 4-year cycle. What if it goes beyond, and the next bottom comes sometime out here, and then you're still looking at some type of lengthening? And again, you could somewhat dubiously extrapolate this as well, but my thinking is that we have something like this. We put in a cycle peak maybe over here. I mean, that's what I'm drawing in September 2022. Something like this maybe. I know if I don't draw it how I want it, people are going to say something. So maybe something like that is a possibility. And then maybe a bear market. So something like that. I don't think we're going to go back down. Obviously, not to those levels. I should probably draw it to where I actually think it's going to go. But maybe back down to the 50K range or something. Because one of the things we've noted before is that the regression bands, the price tends to go to the fair value around the halving. So that could put it right around that point right there. Just something to point out in terms of dubious extrapolation. So when you look at it as measured from, say, when you measure it from the bottom or you measure it from the halving, you do dubious extrapolation 1 over x, where x is time. Seems like things could lengthen a little bit. Maybe this helps put things into context why I think it's possible for us to have a consolidation phase for a few months before continuing higher. It's not that I think we're going to come back down to these levels. It's just that I think we're gonna reaccumulate before taking our next step into the next journey of our overarching market cycle, which again I do not think will peak in 2021. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Thank you guys for tuning in. Definitely subscribe. I'll see you next time. Bye.